So unlocking the potential through consolidation. We are going to be talking a lot about consolidation. Big banks with enhanced capacity to increase credit. Big economy, you need banks which can sustain that kind of a growth potential. And the trajectory has to be maintained from the point of view of the banking facility that we can provide for the people of India. Banks with strong national presence and global reach is what we want. Operational efficiencies, gains to reduce cost of lending. So the scaling up will only allow them to have a lot more resources, and therefore the lending costs can come down. And therefore the blueprint that we're coming up with is going to help us towards building a $5 trillion economy. Enhanced risk appetite they can have. Thrust on next-gen technology for banking. Technology is an important feature. You'll notice that further we talk about, we've given a lot of mind application for ensuring that the fintech that they operate with are all going to be such that no customer disruptions will happen and enough attention will be taken towards bank and its consolidation. Wider offerings with enhanced customization and better ability to raise resources from the market. So we very quickly give you a complete picture of what kind of consolidation we are going to be doing. The first one, before I start, the large capacity of one bank, the technology-driven capacity of another, and the strong deposit franchise the third has, are all being brought together. So Punjab National Bank, Oriental Bank of Commerce, and United Bank will be brought together, and they shall form the second largest public sector bank with business of 17.95 lakh crores, which is at least approximately 1.5 times that of Punjab National Bank. So that will be the first one that we're talking about. The second largest branch network that is available in India will be of theirs, with 11,437 branches. So the first one that we are announcing is Punjab National Bank, Oriental Bank of Commerce, and United Bank. Three together. What will this give us? A high CASA and lending capacity combined in consolidated bank. Large cost reduction potential due to network overlaps. Cost saving and income opportunities for the joint ventures and subsidiaries. Most important, the point that I said earlier, we have taken clear care that the platform that they use are compatible. In merging or in bringing together the three banks that we've brought down here, we made sure that the technology which is used in this Bank 1, Bank 2, and Bank 3 are compatible, and all the three banks can enable a quick realization of gains without customer disruption, without any disruption to the service that they have to lend. We go to this most important table. The indicators that I would draw your attention to are the CET1 ratio, the CRAR, which is the capital reserve ratio, and also to the net NPA ratio, the three above the category of employees, which is very important for you to notice. And all the three are very critical indicators to tell you that this consolidation in this particular case is absolutely healthy. And we've kept all the Basel norms, RBI's guidelines and the Basel norms in mind, even as we have put these numbers together for you. If you have any questions, we'll be able to answer it later. I don't want to labor on each one of them, but I want to completely give you the confidence that we've applied our mind on the Reserve Bank of India guidelines and also on the Basel norms, which will have to tell us what these numbers ideally should be. We've kept that in mind. I can go further to explain that a bit later. Should we now move to the second? The second which we are consolidating are both banks coming from the south. Canara Bank with Syndicate Bank. They will be the fourth largest PSB with business of 15.20 lakh crores, which means approximately 1.5 times more than the current size of the Canara Bank itself. Third largest branch network in India, they will hold, with 10,000 342 branches. Large cost reduction potential exists due to the network overlaps. Similar culture to enable smooth consolidation because they come from the same region. Cost saving and income opportunities for JVs and subsidiaries, and therefore immediate, without disruption, continuation of service for all customers. Again, mind application on the point that they both come under similar compatible financial technology that they use, so both are able to quickly realize the gains. Now, the indicators which you will be interested in, again, something which I would want your attention to be drawn on: CET1 ratio, net NPA ratio, and also the capital requirement, adequacy requirement ratio, all of which are given here and absolutely tick marked from the point of view of Basel norms and also from Reserve Bank of India guidelines. All three meet more than the ideal situation.